Hi everyone, it's great to talk to you after such a long time. Are you guys able to hear me and see me clearly? Hi Mahesh, hi Naresh, Satish, Ashwin, hi Tyson, hi Santosh, hi Mr. Josie Vergis, hi Mauli, hi Arvind, hi Uma Shankar. I see a lot of people who regularly interact with me in the comments in the videos. Hi Raj, hi Joshua, hi Raju, Parimi, Ashwin, Ram. So today's session will mostly keep a Q&A session because I wanted to keep it more interactive. I wanted you to ask questions. I'll just start with a general agenda, give you a brief about the present market scenario and how we see the markets in 2022. And then I'll open the floor for the question and answers. So we'll wait for another 10 seconds and then we start. You can have your questions ready after, give me just 10 minutes uh, after I finish whatever points I have decided to speak about, then you can start firing your questions. Okay, so let's start. So let's start with what can be the market movement, the movement of the Indian markets in 2022. So, as you know, we have given a very big rally. From the bottom, we have gone up more than twice. And from the pre COVID levels, also from around 12,000 odd numbers, we have come to above 18,000. And now we are consolidating. So, since we have given a very big rally, this could be a year of consolidation. And there are a lot of global factors coming into play, some factors which were expected and some factors which were unexpected, like the war situation which had come recently. So these kind of macro factors will keep the markets range bound in 2022. Now when we say that the markets will remain range bound, can the markets not make a new high in this year will be a question in everybody's mind. So there is, as per me, I am quite optimistic that there is a possibility that we break the new high in 2022 also. But it's not necessary that after breaking the new high, after breaking the old high, we stay above those levels and enter the next year. But there is a high possibility that we break the earlier highs of about 18,500 odd in this year itself. Now, how is that possible when there are so many local and global factors which are suppressing the markets? As you know, markets are, or the share price is the slave of the earnings that the companies deliver. So, the earnings of Q4 for most of the sectors will remain subdued. There will be a lot of pressure on the margins of different businesses because of the cost inflation. But along with the numbers, or along with the weak numbers, if the companies give a positive outlook or the companies start delivering good results in Q1 FY23, it may not happen for all the sectors, but a majority of sectors, if they start delivering good numbers from Q1 FY23, then there is a high possibility that we break the old high and make a new high in 2022 itself. Now, when we say that the markets will remain largely range bound this year, then how should we approach the markets, or what should be our allocation strategy, or how should you manage your portfolio? See, one way you can manage is the same old way which we have been doing till now, that you buy some good stocks and keep on holding them, and let them remain range bound for a while, and let the compounding happen on its own. But the other approach could be that when you are sure to quite a extent that there could be a range bound movement for the next few months, you can do a little bit of profit booking in your long term stocks. A partial profit booking can be done, and the same can be reallocated whenever there's a small correction in the market. So you will be satisfied that you're making some booking some profits during the consolidation phase, and you remain largely invested. When I say partial profit booking, that doesn't mean that you book 50-60% of the portfolio value. It is up to just 10 to 20% of the portfolio churning can be done whenever you are in a consolidation phase, and you can remain fully invested after you see the signs that you're coming out of this consolidation. Another strategy what can be done is around 80-85% of your capital, you can allocate that 80% capital into your long term stocks and leave it as it is, and don't touch them and don't disturb them. Another 20% of your capital, you can start doing short to medium term trading in fundamentally good stocks. So that can also be done during the consolidation phase, which we are going to see in the next few months. Now, what could be the good themes to invest in 2022 and going further? Whatever sectors or themes which have worked in the last 2 years may not be the best to invest in the coming few months or years. There are new emerging themes like the internet businesses, the startup companies, then the technology companies which are specifically focusing on the newer themes like the electric vehicles. Then there is a lot of traction or importance given by the government to the defense sector. So that is a very good theme to invest for this decade. There's a lot of scope in investing in sectors like gaming and the music streaming industry. Logistics will also do well if the economy has to grow. So these kind of new sectors or themes you can explore instead of investing in the old traditional themes which you have been doing, like banking, metals, and other things in the last couple of years. Now, a lot of times when I am interacting with people, I see that they have purchased some stocks at a very high price in the recent rally, and now they are stuck with a 20, 30, 40% loss in a particular stock. So I thought I would try to help you out by giving you a general advice as to how you can deal with such a situation. So when you're stuck in a stock, let's say some stock at a loss of about 25%. So a couple of things which you need to figure out is, first is how much is your allocation to that particular stock. If it's just 1-2% of your portfolio, it's a different scenario. And if it is more, let's say 8 to 10% already, then it's a different scenario. The second thing which you have to see is whether the company can continue to deliver good earnings in the coming future, and that earnings will justify the price which you have purchased earlier. So if the allocation of the stock is less in your portfolio and the company is expected to deliver good earnings in the future, it's better to average that stock and you can come out of it. If the possibility of delivering good earnings is less, or the stock is, even after falling 25%, it is highly overvalued, or if your allocation is very high, then in such a scenario, it's better to put a stop loss and come out of it by trailing that stop loss and minimizing your loss. You can use that funds to invest in some other stocks which are undervalued and fundamentally good, and recover your loss in the long run. Now, whenever some new investor comes into the market, a lot of you have been interacting with me in the last 2 3 years, but there are still some people who are so there are still some people who are new to the markets. So for new investors, how should you approach the markets? The first thing I would advise is don't directly jump into the market and be overconfident and start buying whatever you feel is correct. If you are not aware of the fundamentals or if you're not experienced, then either go for a mutual fund or a PMS if you have high capital. If you want to do directly, it is always better to have a mentor or a consultant who can guide you to invest. So he should be like a hand holding guy who can guide you what to buy, at what levels to buy, how much to allocate, when to sell, how should you mitigate your risk. So those kind of things he should guide you. So when you're working with him for, let's say, a couple of years, then slowly you will get independent and you'll have that knowledge to do things on your own. Without that, it is very risky and there's a high chance that you burn your hands in the stock market. Now, the last thing which I wanted to talk about today is the importance of macro factors in the market. There are different schools of thoughts for this. One school of thought is the macros are not important because if you're a long term investor, the short term changes in the macro factors. When we say macros, there are things like changes in economic conditions or changes in interest rates or these kind of things which uh, impact the markets in the short term. So if you are a long term investor, let's say for 10 years you are investing, the markets may fluctuate now and then, but as you're a long term investor, all this gets nullified or all this gets ignored as the markets bounce back and you get your returns after 10 years. That is one school of thought. Another school of thought is even if you're a long term investor, which I personally believe in, even if you're a long term investor, you have to keep tracking the macros because even if you choose a good stock to buy, the right entry of the stock is also important. I don't believe in buying a good company at whatever price available in the market. I differentiate between a good company and a good stock. A good company available at a reasonable valuation, having a possibility of re-rating of that valuation will make money for you, and that is why it is a good stock. So when we are tracking macros, when we see that the economic conditions locally or internationally are not good and we are expecting a fall in the market, it is better not to enter the market at that time or to preserve cash and buy your favorite stocks at the lower levels. Now, most of the people may say timing the market is not possible and that is not going to happen. But at least for me, I am able to. I wouldn't say that every time I'm able to buy at the bottom, but most of the times I am able to buy things at quite a reasonable price, tracking the macros. So for me, tracking the macros is important if I am a stock market investor. So these are the few things I wanted to share with you in this live session before I open for Q&A. So now you can start answering the question. You can start asking the questions. I'll answer. So the question here is, what model do you follow to value a company? Is DCF really practical, or should we go with EV by EBITDA ratio? So normally DCF can be followed if you know how to do it because it's not easy. And second thing is, if when we are trying to get the valuation with more accuracy, normally I don't get into a pinpoint valuation with the DCF. On an overall basis, I see what, depending on the earnings, what is the P ratio of that company, how many times from market cap to sales can be reasonably given, and what could be the growth factor which has to be considered in that company, how much is the sector getting the price to earning ratio, how much is this stock getting the price to earning ratio in the last 5 years, 10 years. So considering all these factors and overall basis, I'm able to decide, because largely I feel a part of analysis is numbers, but the other part, the 50% of the rest of the part, is our conviction. Some lot of times what have happened is I have not invested the stock in a stock at a very reasonable or a very low valuation. I have entered in the middle with a good conviction, and I have made a lot of money because I know that the company and the sector or the product has that potential of exponential growth, and the valuation can further re-rate from those levels. How do you see the rise in inflation? So Naresh is asking this. I feel the inflation is near its peak. There will be active measures taken by the Indian government to tame the inflation, and by the other governments like the US government also. And slowly we will get back to normal in a phased manner. So Mirza International and ICICI Bank. So Mirza International is already given a big run up. So you should wait for a correction and gradually enter it. And you cannot just buy it at the current levels. ICICI Bank is good to accumulate starting from the current levels where it is. Adani Group companies I generally refrain from investing in. Tata Power is a very good stock, but it has given a recent rally in the last week. So you need to give some time for it to give some correction and consolidate, and then gradually you can enter. Nazara Technology is a good stock. You can start accumulating in the current levels. This is one of the stocks which is a startup kind of company which were recently listed in the last couple of years. And this is one company which is consistently making profits and also generating positive cash flows. So Motherson Sumi Wiring Harness, yeah, the new demerged company from the Motherson Sumi group is a good company to invest in, but I'm not expecting a very high teens kind of a double digit growth in this company. How to handle the portfolio in recession? This is what we have discussed the approach before we started the Q&A. Heidelberg Cement. So if you can very well handle the cyclicals like the metals, cement, and the other commodities, only then you try to play the cycles. If you don't know how to play the cycles, then it's better to stay away from them. And in the cement sector, I feel rather than the MNC companies like Heidelberg, the Indian companies like Ambuja and Ultratech will, or Dalmia Bharat, can outperform the MNC companies like Heidelberg in the cement sector. My view on MTAR at the current levels, Mahesh is asking. So MTAR, I still feel it's very overvalued. It's a good company to track, but not a good stock to invest at the current levels. Is it a good time to invest in Polycab? So Polycab is a very good company, but due to the recent run up, it has become kind of overvalued. So we need to give some time for it to consolidate. The results may not be good because of the commodity inflation the company is facing recently. So if the results are bad, there is a chance that the stock may correct and you may get an opportunity to enter. View on Shakti pumps. So Shakti pumps and these kind of companies are mainly related to agri theme. So they are also dependent on the monsoons. If the monsoons are good, the demand for their products is good. Otherwise, it's bad. So if you want something to consistently compound, then you can go for other stocks. Otherwise, you go for Shakti pumps kind of stocks. If I've already answered, please try not to repeat your questions. Rate gain is good for long term. So rate gain, again, I'm not very comfortable with the valuation. And in terms of business model also, I don't find it so attractive. What about HDFC Bank at the current level? Because the news of the merger is already priced in, now the stock will give a correction and a consolidation, and then it will start rising. So you can get it at lower levels. Muthoot Finance. So Muthoot Finance is in a very competitive space. There are more and more new companies entering into gold loans, as well as the banks are also aggressively expanding their gold loans portfolio. So the way Muthoot and Manappuram have created wealth for the shareholders in the last 5 to 10 years, I don't see that happening so well in the coming few years. So here is, with the cost of raw material rising every day, are we still optimistic with the results from the companies in the current year? So this is again a good question. For Q4 FY22, we are not very optimistic with the results. In fact, for Q1 FY23 also we are not very optimistic. But in Q1 FY23 onwards, we may start getting good commentary about the remaining quarters of this year. If that happens, then what happens is market discounts the future immediately. So when such kind of thing happen, the market begins to rally when the companies start giving positive commentary of their upcoming results. Is it right time to buy Tanla Solutions? Tanla Solutions has given a very big rally, and the in the past there have been some corporate governance issues, so I would stay away from the stock, although it has made a lot of money for investors. Avenue Supermart is a very good company with a great business model, but it's a very overvalued stock. So the risk reward ratio is not favorable for any investors to enter at the current levels. KPR Mills, the textile sector has done well in the last year or so, but I'm not expecting the same to continue in the next few months. And compared to the normal valuations which KPR Mills used to get, it is quite overvalued presently. CDSL is a good stock to enter, although it's overvalued, but still you can gradually accumulate as the number of people entering the market is going to continue, and CDSL will have a lot of other opportunities other than preserving your shares and other securities in the demat. There could be other electronic things to be saved in your demats in future. So it's a great business with high margins to be into invest in. Should I hold IOLCP? Current loss is 16%, but holding 2% of my portfolio. So the problem with IOLCP is the dependency on ibuprofen business. The management has been saying in the earnings calls that they will diversify their business and they will slowly reduce their dependency on that ibuprofen chemical. So we can listen to the next earnings call of this quarter. And if we really see that the management has started diversifying and the contribution of ibuprofen has reduced in the total revenue and the results have started improving compared to the earlier quarters, you can hold an average IOLCP, but at the lower levels. Once you average, there the company is not that bad. You can come out at your cost. My thoughts on Latent View. Latent View is a great company. It's working in a great theme or sector, but the valuations are very high. We can get an opportunity to enter into latent view during any big market crash, so you should keep it in your watch list. Santuraj, you're missing my question. Please ask once again. I'll go back and ask, try to get your question. My view on new age companies like Zomato, Paytm, Card Trade, Policy Bazaar, Rate Gain. Most of the companies what you're mentioning are the new age companies which came at absurd valuations, trying to kind of I wouldn't say fool, but trying to, I'm not getting a softer word for that. So they came with such high valuations which were not justified by the results, and that's why those stocks are into a heavy correction mode now. So yeah, most of the new age companies which have come out, most of them I am not in favor of investing in them, except a few companies which are having a positive bottom line and generating positive free cash flows. Vaibhav Global and Jubilant Foods are corrected to decent level. Is it the right time to enter now? See, both of these companies are good. They had some recent issues which are temporary. Like Vaibhav had some issues with posting good numbers, and the valuations had also become very expensive. That is why it has corrected, and now it has kind of bottomed out and recovering. So there could be a possibility of entering at the current levels. And Jubilant Food, because of the new CEO coming out, that generated a big impact, and because of they not reporting the same store sales numbers, the stock had corrected. But I feel the new person joining in place of the old CEO will also be equally good, and if that happens, then the stock may continue to rally upwards. IDFC First Bank, I generally refrain from investing in the small banks in the financial services sector, as the risk reward ratio is not much favorable. If there is a default by any of the big clients, then there's a huge impact. Jubilant Ingrevia is a good stock, but it may take a lot of time to come back. If you're already holding from the top levels, it may take a lot of time to come back, so you have to average it. But if you want to enter new, then Jubilant Ingrevia is a good stock, belongs to a good group also. Tega and Tarsan. So I'll take up Tarsan for you. So Tarsan is a very good company. It commands a very high margin in business, close to about 40 to 50% of gross margins in the business. So that shows that the company has strong competitive advantages, but valuations are slightly expensive. So during any market crash, if we get it at a reasonable price, Tarsan is some stock where you can start making a position. Hi Rohit, did we miss the train on music licensing companies like Saregama, T Series? Yes, we have missed a train, and we should accept that, but we should continue to track them, as every 2 to 3 years there's a huge correction in the market, and at that time when the rod is hot, will strike the rod. Tata Power bought 5,000 shares at 100. Shall I hold it for another 2 years? Is it worth holding? Yes, it is definitely worth holding Tata Powers. If you are somebody who wants to book a little profits, you can do whenever it's coming near its high and then re-enter, but that should be only a part of the profits out of 5,000. Let's say just 500 to 1,000 thing. Otherwise, even if you hold it as it is also, it's a very good stock, and I feel it's going to be a consistent compounder for the next few years. Rajesh Narula sir says, yeah, Nika could be 450. I wouldn't comment on that. What go-to technical analysis tool can a naive person learn while entering into a stock? So this is a very good question. You need not be a technical expert or use complicated technical tools to understand the market. There are a lot of people who are not using any indicator, just based on the price action by the patterns on the charts, they are able to decide. So there are some broad 10 to 20 patterns which generally build up on the charts. You can look at those, you can learn those patterns, those 10 20 patterns, and some basic indicators like moving averages and RSI. So these few things are enough for you to decide a entry level as an investor, not as a trader, I'm saying. What happened to escorts? So yeah, escorts, I was also studying in the last couple of days and trying to figure out what was wrong, because it is a good stock, so I'm watching it. So for escorts actually came out with a bad outlook on the upcoming numbers, so that is one reason. And there is a open offer coming up, or just happened. Because of that, escorts has been falling. So still it is overvalued. You can wait for another couple of hundred rupees fall, and then I think it should be a good level to start accumulating escorts. But Nika is also high premium, but it is not correcting, says Santuraj. So even if it is not correcting, there are some opportunities in the markets which we have to miss. Wherever we feel the risk reward is not in our favor, we can't take every opportunity in the market, and which is not falling within our criteria of investing. We should try to leave certain opportunities. There are people giving their views also. So cams, yeah, cams, I feel for the near term, it's, I feel on the charts it's bottom out. So you can start accumulating cams. By the way, whatever we discuss here is just for the education purposes. It's not any stock advice. LTI is good level to add. LTI actually is not some one of my favorites IT stocks. I am more inclined towards other IT stocks, as there I feel there are better companies to invest other than ITI, both in small cap, mid cap, and large cap. So it's not something I regularly track. But still, you can drop me a message in the comments. I will read the chart and give you an entry level. Not now. After we end the this live, you can leave a comment when I upload this video, or you can mail me. Bajaj Finance can be still be a multi-bagger. Yes, a multi-bagger in the sense it can't multiply in just a couple of years, but it can be a consistent compounder, as it has continued to show growth in the recent quarters also. So it's always a good stock to have in your portfolio. View on Infobeans and Metro Brands. Infobeans is a great company, but it's kind of a little overvalued now. Metro Brands has a decent growth outlook of about 15% in the coming years. But in terms of valuation, I don't somehow feel it deserves the valuation which the market is giving. I may be wrong because the market is supreme, but still, I don't feel that the business model is such that it deserves the valuation which it is getting right now. Is Ace a better alternative to Escorts? I don't think so. I feel Escorts is a better company than Ace. Zensar Technology, is it good level to enter for medium term? Yes, it could be, but you can't allocate fully at the current levels. There could be a small correction from the current levels also. But for a part position, Zensar can be good. Is it good time to invest in IRCTC? No, I don't think it's a good time. I feel it's a good time to exit IRCTC and invest in other stocks. And I feel it's quite overvalued. Godrej Consumer and Tata Consumer Products. I don't track Godrej Consumer much, but Tata Consumer, uh, there are a lot of restructuring which is happening in the Tata Group, which is in favor of Tata consumers. But in terms of valuation, the recent rally taking it to 90 Ps and all, I feel it's a bit pricey. If it falls another 20% from the current levels, I think it could be a good level for to enter Tata Consumer. With the recent statements from Paytm CEO, are you positive on Paytm? So actually, the Paytm story has been always interesting. There have been different statements right from the beginning when the IPO came. There are a lot of memes also made. So there were statements saying that we came out with this valuation because we wanted to leave something on table for the investors. Otherwise, we would have priced the IPO higher. So there have been different comments earlier and even now. But I don't go by the comments. I would go by the results. If the results are coming good, and the valuations are justified, I will be the first one to buy Paytm. SRF is a great company. Sometimes short questions are also good and easy to read. SRF is a great company. It can be a consistent compounder from the present years to the next few years also, but not good to enter at the present level, and you should wait for dips and accumulate gradually. So we'll take spend another 10 minutes and we go offline. We are already 35, 36 minutes in. The next 10 or 9 minutes we go offline. Can you please make a video on how to understand the business of a stock? Actually, the way we are analyzing companies on our channel, along with listening to what I'm saying, if you try to understand how I am analyzing different sectors and businesses, you will be able to understand what you are saying. Maybe not in one video, but you can choose about 5 to 10 videos on different sectors, and you can understand how I'm picking and choosing and analyzing different sectors. Lux Industries versus Rupa, which is my choice? Actually, I don't prefer much to invest in these kind of companies, so both are not my choice. Devang Kumar, I am sorry if I've missed your question. One second. Devang, I'll try to see if I can get your question. Devang, view on infrastructure sector. Sorry. So, infrastructure sector, I am very positive. Construction sector, infrastructure sector, I am very positive. But my way of playing this sector is I don't directly buy construction companies because there are a lot of chances of corporate governance issues in such companies. I don't say those most of the or all the companies are bad, but still there are, the business is as such that it's not a very clean business. So rather than directly buying construction companies, if you buy ancillary industries like paints, wires, pipes, metals, these kind of things which are ancillary to the construction sector will help you ride the theme, help you invest in the theme, participate in the theme, at the same time remain in better companies with consistent growth and cleaner managements. Amber Enterprises is a very good company, but not a good stock because the valuations I feel are very high. The rally which it had given in the last couple of years, that I don't expect such returns in the coming few years. So I would prefer to stay out and invest in other companies or sectors. Marico is a good company, but slightly more correction is would be better for it to start accumulating. Earlier, Marico was giving a guidance of close to 14 to 15% growth, which I was very impressed with. But due to the inflation concern, they have now reduced their guidance, or they are not confident of delivering results in the coming quarter itself. So in FMCG companies, if the results are bad for the next 2 3 quarters, there could be an opportunity for you to enter them at lower levels. So it's a good company for you to watch. Definitely to keep it in your watch list. Is it the right time to buy SHIL? Yes, it could be a right time to start accumulating SHIL. Sham Metallics is a great company. It has very high capex plans. They are delivering those capex plans. You can see the notifications which they have uploaded in the last couple of months. They are constantly adding capacities. But the sector which it belongs to is a cyclical sector. So you should generally buy the metals whenever the sector is in their worst situation. So you should wait in such kind of situation and then buy at those levels. Adani Total Gas will continue to run at least for another year. PE is crazy. I generally try to stay away from the Adani Group stocks. My view on Polyplex is a good company, but this sector is generally given lower valuation Compared to earlier, they've been given decent valuation now, but from current levels, I feel this sector may not have another re-rating. So it's a kind of a little late to enter them now. Can TCS show growth like Tata Elxsi? Given the size of the company, it is not possible for TCS to show a growth like Tata Elxsi. My view on Greaves Cotton. So Greaves Cotton, again, it's a mix of a few businesses. So in such businesses, what happens is even if a particular theme or a particular business is performing well, like the electrical vehicles business, the other business doesn't perform well, so it will not allow that company to get a higher valuation. See, stock specific, I can't suggest stocks online. Which company is? No, no, I'm sorry. I'm sorry. Ugro Capital, I am not tracking. It's a very small company. Again, into financial services. Trident, I feel again for Trident that somehow I feel that the quick money or the golden period in the last 1 year is kind of gone, and from the current levels, whatever returns you've made until now, that kind of returns may not be possible in the next couple of years. Satish is asking, APL Apollo as a 2 to 3 year play is a good stock. How to approach SIP on stocks? So most of the people understand SIP as investing a fixed amount of money every month on any specified date. But in an SIP also, I generally suggest my clients to do a opportunistic kind of an SIP. What is that in simple words is you start saving money every month, but generally in about 3 to 6 months, market gives you a bit of five, let's say 5 to 10% of correction. So whenever that kind of correction happens, it kind of happens almost every year. At that time, if you accumulate good stocks, then that kind of an SIP can yield better returns for your portfolio than buying at any price every month at a fixed rate. This is my view, but there are different schools of thoughts where people say we can't time the market. But I have been following this and I'm pretty happy with my performance, and my clients are also quite happy with what they are getting when we are following this strategy. So last 2 minutes and then we'll wind up. Please don't repeat the questions when I've already answered. Thank you, Naresh. Can Tata Elxsi grow further? My entry level is 1300. Tata Elxsi can grow further, but at the present level, I feel it is overvalued. So if you are holding from 1300 levels, that's good. You are a lucky investor. You can continue to hold it, but be prepared for about 20-25% correction, ups and downs on its journey up, which is quite normal for any long-term investor. My view on Kelton Technologies. So Kelton Technologies, I feel is not the best option in IT sector, although it may give returns. But for me, the first thing I look at is the business. The second is the valuation. So even if the business is not great, generally such companies are given lower valuation compared to other peers in the sector. So I feel in the IT sector, there are other companies in small cap, mid cap, large cap, which have a lot better business models than Kelton Technologies. Apollo Tricoat is going to merge with APL Apollo, so it is as good as buying APL Apollo right now. My view on Adani Wilmar, I feel it's a very low margin business, and why after they diversify into other businesses which are of better margins, and the valuations continue to be reasonable, then I would be interested in buying it. Infobeans is a great company, but it's slightly overvalued right now. KPID is very good for the EV play and the other emerging technologies in auto sector, but it is kind of overvalued right now. Another 20% correction from the current levels could be a good point to enter. Sono Comstar is a great company, but not a good stock. Again, like MTAR, Sona Comstar, all these, if you get it in a market crash in future, in the next 2 to 3 years, you should have these in your watch list. Gold prices are rising, then why is Manappuram Finance not performing on the chart? So it's not that only the gold prices will lead these companies to perform better. There are a lot of other factors. Like first thing is their earnings, so that should improve. The kind of competition is there in that sector. It's not always possible to beat the competition and deliver better results quarter after quarter. So it's almost 45 minutes now. So we'll take a last 2 3 questions and then we wind up now. Once small case is selected and fixed amount, and that amount will continue. I'm not able to understand the question. K rating, Chrysil, all these companies are having good scope in their sector, but I'm not expecting very high returns from this sector in terms of investment. Bajaj Finance versus Chola Investment. See, I would any day go for Bajaj Finance, because in financial services sector, I generally try to play safer as the risk is higher in this sector. Newgen Software is a good company, but there are better options available in the IT sector. Arbitrage opportunities in Apollo Tricode. Yeah, if you want to buy at a lower price, you can buy. Ultimately, you will be getting shares of EPL Apollo, and when the time of merger comes, there is a high chance that both the prices become equal in the market itself. So, last question, Uma Shankar, will take that offline. I'm sorry. Borosil Renewables. So Borosil Renewables is a great company, but it has given a very big rally. So, but the company is growing continuously. They are continuing for capacity expansion. There is a risk of competition from other big houses like Adani, Reliance, etc. But as the market will grow, the company will have chances of continuing to grow at the same pace. So as they are doing more capex and the revenue is expected to increase, it is still a stock which you can add on dips. So that's all for today. If I have missed your questions, I am very sorry, as in spite of putting a 30 seconds gap, there were plenty of questions coming. So I'm sorry if I've missed your question. cavarunagl@gmail.com is my email ID. You can email me a question, I'll answer. Or you can, Sadbhav Engineering, I really don't track, so I will review that and answer. So if I missed your question, you can email me, or I will upload a recorded version of this session. You can comment in those in that video. I can reply to that also. I hope I was able to justify the time which you spent with me. Just to tell you about our consulting services, you can opt for one of our consulting services, which we talk about in the Telegram channel now and then. So in that, on a 1:1 basis, I do consulting with people like you and guide you to invest. If you want to know more details about it, you can write to me on email, and we can also have a one-on-one introduction call for you to understand about those consulting services. So I hope you like the session. I will try to be more regular now onwards for coming online. And thank you all for coming online, sparing your time. It was very nice interacting with you after such a long time. Thank you for watching, and thank you for talking to me, spending your time. Good night, Jai Hind, and have a great weekend.